What's up everyone? I thought today I would make a quick video just on a bit of a concept that I've seen in my trading recently. Just kind of discussing the difference between how I trade now and how I've traded in the past and why I think it's the difference between being successful and not being successful. And that is essentially um, being situation focused rather than chart pattern focused. When I used to trade the stock market, I was obsessed with just find a breakout, find a chart pattern for a breakout, or later on it would be find a chart pattern for a big sell-off, find those key levels. And the issue that I would have when I traded like that is so often I would get what looked like a clean setup, a nice breakout pattern, but it would fail. And I would then get a really nice clean signal on something else, but it would fail. And my win percentage was incredibly low. And I kept just thinking to myself, how is this the case? I'm trading chart patterns relatively accurately, but I'm sucking essentially. And when I began trading futures, initially I had a fairly automatic style. I created a strategy with a friend where essentially we waited for a trend break that would look similar to this, for example. So we've had a trend break, we're bullish, and we would then simply buy the pullback to whatever moving average we were using, risking 20 points, targeting around about, I think it was 2.5 R. And for a time that worked until it didn't. And it was a really frustrating kind of journey to go through because it was like, why did these strategies keep falling apart? And why is it that some traders continue to be profitable? And I would say in the past few months, but particularly the past few weeks, it's become clear to me what the difference has been in my trading now compared to in the past. And like I said, that is being situational focused. So what I've come to realize is that every strategy works when you have an edge. When you don't have an edge, they're just lines. And as humans, we're really good at finding patterns and going, oh, look, there's a flag, there's a flag, there's a flag. The reality is that just looking for a flag isn't going to work. Just looking for a breakout isn't going to work because I can probably find you 100 different examples of flags that did work and 100 that didn't, and 100 different breakouts that worked and 100 that didn't. The reality is that that is chart patterns, and the way to become super successful is to understand in which situations you have an edge. So I'm just going to go through really quickly some examples from my strategy. So a big thing that I like to do is wait for a level to become somewhat important. And we saw here, this was on Friday. I didn't take this trade actually. I wasn't in the room at the time, frustratingly, but we can see here that we had a level that became important. We've had this big run up from the open all the way to here, and we finally find a level that fails to really break out. And we've even got a bit of a head and shoulders. I don't think this is the cleanest head and shoulders by any stretch of imagination in terms of period of time, but we had a bit of an inverse head and shoulders. We have a bit of a head and shoulders here, um, and combined with the fact that we had a high of day that actually failed to really break out. And this here for me, especially when you see the sideways price action, has been a critical element of my trading, is to understand when a level is important and what I need to see from a situation point of view that gives me an edge. And recently it's been mostly buying off of support areas and selling off of resistance areas, but it does also work the same breakouts. I'll try and find some of those. But once we've got this situation in play where we've put in a clear rejection that has been tagged, so a clear level that's been tagged a couple of times and failed to go, we've got this kind of like whole try breakout area. If we go across here, this whole breakout area, and I particularly like it when you get this. It's a clean flag and it fails to go. Even tried again here on a deeper pullback to have another go. When you have this, for me, this tells me there is a very high probability that if I get a short setup, it will give a big move. And in this instance, we got, for me, a really clean short setup. We got below the 50 EMA. We had a very clean flag. The entry would have probably been around about here, around about the 76 area. I wouldn't have even risked the high of this. I don't think I'd have probably risked more to like here. Um, So around about a 10-point risk, maybe a little bit more. And then as you can see, it very quickly, sold off down to my second take profit level. And that is purely because of the situation. It's not a chart pattern. It's understanding that edge comes from identifying the situation and then getting the move. And I saw on, I think it was Thursday of last week, I had a number of situations that set up that didn't give me a trade, but I felt confident that we'd get a move. So, for example, here we had the initial low of day set, right out the open. Then we came into that level and we actually held that area for a while. And you can see there's a very similar type of price action where it's come into a level, it's failed to break, and now it begins to hold. And we even had that same kind of like false break before it goes, which is something I really like to see. Now, in this instance, I didn't get a bullish setup, right? I did not get a nice sort of pop over the 50 EMA, come back, reject it, and push higher, which is, for me, my entry signal. But you can see that once the situation was in play, the edge was apparent. And once this thing began moving, we got a pretty significant move higher. And then later on in the day, if we have a look, we did the same again, where we set a high. We had that failed break attempt, which is something that in the last few days has worked really well. It doesn't always work. It's more understand this price action of, okay, we've got a level that's been tagged multiple times. We've got this slowing down sideways price action. There's probably going to be a lot of selling. It's understanding the situation. So the big thing out of this, and I'll go through some more examples, but the big thing here is stop looking for chart patterns primarily. Stop going, right, I'm going to be a robot and I'm going to wait for this, this, and this. What you need to do is understand the market is more like a living thing, and you just have to wait for it to tell you that your edge is in play. And for me, both of these situations, neither of them, I didn't take any trades here. I didn't take a trade off of this price action. I didn't take a trade off this price action here. But we got the moves afterwards because of the situation giving me edge. Now, later on in that day, there was a setup to go short that gave us a small win, but then we had a setup where we'd actually come down and we'd held level. And even though this doesn't look quite the same, we can begin to see that we've got the same area of support holding. We've got sideways, we've got sideways price action. So the same kind of feel. And then for me, this time it did give me a trade. I don't think I took this one either. I wasn't fully confident in it. I didn't fully trust this. Looking back, I probably should have done. But we can see it got over the 50 EMA, began holding, boom. Easy trade. So, I'll go through one more example just for the fun of it, really. Let's go to this day. See if there was any kind of setup. Might have picked a bad day here. No, so okay. So we had in this instance more of a breakout opportunity where we'd put in a we broke above the previous day's high, and it was a relevant level because we can see here that once we came into that level, although this wasn't news, we initially tried to reject, and then we broke out. So now we've got a level that has been tagged a couple of times, broken out, and we get that same price action where it comes down, it begins to hold. It held over the 50 EMA, and there was a really clean move. And then a little bit later on, we had, again, the same kind of thing where it's a case of going, okay, let's wait for the chart to tell us. And we put in this low here. Does this low match up? Yeah, it matched up with the highs before the news. It essentially matches the breakout area and also some really key resistance from the day before. So from a chart perspective, yes, there has to be some sort of technical analysis, but for me, it's really a case of saying, okay, what does my situation look like where I have an edge? And for me, it's when a level is tagged a couple of times and then we get a setup. Later on in this day, I believe there was a setup later on, maybe not, but there might have been. Okay, so here, for example, we got that same concept again, and this is all about looking for situations. We've had an area that has rejected a couple of times. We come back into it. We get that sideways weak price action, which means that when I see this, I just go, I believe that there is edge to the short side. And then it's just a case of identifying where we want to get in. And in this instance, it was here, getting in here, risking to here, get a really nice first piece out down here and the rest down on this move. But the key here is I'm not looking for a particular chart pattern per se. Although this is, I guess, a chart pattern. For me, I'm looking for a situation, which is I'm looking for price to come into a level of previous relevance, or for a level to become relevant. It's kind of up here. We got it here. Like we put in a high here. We then come in, we test, we fail, we test, we fail. Once I see this kind of price action, failed breakout attempt, really a level that has become important, I believe there is now, from this point here, I'm saying, okay, I believe there is an edge to the downside. It then becomes a case saying, okay, I've identified there is edge. Now you look for your chart pattern. For me, there wasn't one. But for others, you could have simply gone, hey, you know what? Where's the level where if it lets go going to go? Probably below 940. It's probably going to let go, and it did. Later on in that day, we had this really clean setup where, again, all I went was, okay, the situation that has now developed is one that we've ran into a previous area of resistance, previous key level. We failed to break. We've got sideways price action. I believe that we now have edge to the downside. Then you wait for your chart pattern. Like I said, in this instance, there was one. And then we get the move. And when you stop trying to just be 100% chart pattern based and be more, okay, let's become aware of the situation, you're going to find trading a lot easier, because you're going to be trading in situations where you have edge. This was one of my favorite trades from this week, actually. We had a resistance area here. We ran into it. We rejected it. And look at this. In this instance, we got a setup. Now, for me, I would say I believe I have edge because we've ran into a previous area. We've then put in the sideways direction, and in this instance, we got a setup, and it was a really clean short. Okay, we got the same again here, where we got the same type of price action beforehand. We ran into we set a level in around here that was not really a key level before, but it was kind of an area of support and resistance. But we set the level here, we tested again, and we failed. And I go, okay, you know what? I believe that if we now get a short setup, we've got an edge to the downside, and we actually got two. We got one here initially, which gave a move, and then I got another one here on this beautiful flag back to the 50 EMA. The key here is, obviously I'm showing my strategy, which has performed incredibly well recently. Market conditions, I think, have suited it perfectly. When I'm looking at charts now compared to what I was doing before, I'm not looking for a chart pattern per se. I'm looking for the situations where I believe I have edge in. One of my favorite day traders on YouTube is Matt Diamond. He's been trading for probably about 8 years now, I think. And the thing that he has nailed down is he doesn't think of himself as a great trader, someone who can capture a massive move. He believes that he is great at identifying when he has an edge, and his edge is trading breakouts early on in the market on big names around key levels. So he has become amazing at identifying where his edge is, which situations he has edge in, and also where he has massive edge, medium edge, and low edge. And then what he does is, when he has low edge, he sits back, or he takes very small position sizes. When he has medium edge, he goes slightly bigger and is a bit more comfortable getting into a trade a little bit early. And when he believes he has a massive edge, he will go bigger with his size, quite substantially bigger in some instances, and is more prepared to get in earlier because he has identified this is a situation where I have a really big edge. The key, I believe, therefore, to becoming a great trader is understand the situation where you have an edge, and then honestly, the chart pattern that you trade is not as important. For me, I would say understand where you have a likelihood to get a move, and then understand where momentum is likely to come in. Time your trade for where that momentum is. So in this instance, it was a case of, okay, we've come below the 50 EMA. My belief here was, if we take out this low here, I believe that momentum's going to come in, and it took it out. Boom. And that takes a little bit of intuition to get good at. I'm not going to lie, you're not going to immediately understand where momentum's going to come in. But how many people here would have gone, look at this, we've got a really nice flag break here, fails. We've got a really nice breakout here, fails. Right? Or even here, like, oh, look at this flag, and it doesn't give a big move. Why? Because there's no edge. This is looking at chart patterns. If I simply said right now, okay, just buy every pullback to the 50 EMA once you get above it, where you're taking a small winning trade here, probably a break-even trade here, you'd have taken a loss here, you'd have taken maybe a break-even trade here, maybe a break-even trade here. That's not where the edge is. The edge is understanding, hey, you know what? Wait until a level of interest actually proves itself and then take the play. There was a really good trade here, for example. I didn't take this one where we've got the situation which is an edge. We've got that level tag twice. We've got sideways price action. We get above the 50. And in this instance, we flagged and didn't give a massive move, but this is where my edge potentially was. Understanding that I'm not going to take a trade until I can clearly see that my edge is in play is critical. I'll go through one more chart just to see example wise. So I like giving value where I can. I believe that this is some of the better value I can give right now. So if we look at this, for example, we broke out of the initial range, we pulled back quite aggressively, and we set a low, and then this low here, it's not quite the same, right? It's not quite the same chart pattern. You'd say, well, this isn't coming into the low of day. It's not completely sideways action. And that's where you have to be a little bit flexible and going, okay, do I think I have an edge here? And you could look at this and go, well, if we put in where that low came down to, it came down, it held the 600 level, essentially, right? So it's held the 600. When it then puts in this low, we can begin to see that this was a previous level. So we've kind of put in an attempted move lower, which has failed. We've come into this previous support area and we're holding. Although it's not as clean sideways action, it is fairly sideways. So we can begin to say, hey, my edge is present now. Can't speak today. My edge is present now. All I need to do is now wait for whatever chart pattern I like. Right, and for me, that is once I see it holding over the 50 EMA, there's your entry right there. The risk can be down to, say, here around 10 points. Easy trade. You could easily as well have gone, okay, I'm going to ignore the 50 EMA. I'm just going to take on the break of this. Easy trade. You could have gone, you know what? As soon as we begin holding the 50 EMA, I'm going to go for maybe a slightly riskier entry. And actually, once we get above, I'm going to enter at the 50 EMA, and I'm going to give it initially, 10 points from there, and I'm going to get that kind of trade. It doesn't really matter. You know where the edge is, and it's just making sure you have some kind of strategy. A little bit later on, we had a high that was set, which was here. I don't know if this matched anything. It came into close towards the previous day's high. There was a bit of a resistance area there. You could see that as a pretty clean trade. For example, we rejected the same high here and it flagged, but that's we don't need to do any more of this one. But so we set a high. We get down here, we've got this sideways weak price action, get below the 50 EMA. Look at this. Once this breaks, and you can identify pretty cleanly, hey, the momentum's going to come in below this 44.75. There's the risk. You could have been sitting here watching this. Feels like paint dry, right? From 11:35 until 12:06. You've got half an hour. Nothing's happening. And then suddenly you can identify, hey, I've got edge here. Boom. Easiest trade. This trade actually took one of the easiest trades of my entire life, this one. Okay, so I hope I've made this somewhat clear that the edge in trading isn't just a chart pattern. It isn't, oh, I'm going to use my Fibonacci retracement, or I'm going to use my trend lines, or I'm going to use my breakouts, or I'm going to use whatever. That's not where your edge is. That is simply how you determine to get in and out of a trade. The way you determine edge is to understand your situation. What situation do you have edge in? Maybe you're really good in the first 35, 40 minutes of the day identifying where we're going to get like really quick breakout momentum. Maybe you're really good at trading tight consolidation, and when you see this tight consolidation, you've tested it, you've traded it, and you go, hey, I have a lot of edge in these sort of scenarios because of XYZ. Who knows? But you need to understand the edge comes from the situation, not a chart pattern. I've had traders who I've worked with, and one of them has been sending me charts and saying, hey, look at this. What do you think of this trade? And I'm like, all this is a flag. We're not looking at a situation, right? You're simply taking a random flag break. Tell me why there's edge in this scenario. And if you can't, if you tell me, well, we pull back to the 25 EMA and we flagged, so I took it long, that isn't an edge. That's a chart pattern. I can find tons of that. Look at this. We pull back to 50 EMA, the 25 EMA, we go nowhere. Pull back here, take a loss. We we pull back here, really clean flag, loss. We pull back really nicely here, loss. understanding where the edge is critical to becoming a successful trader. So hopefully I made that at least somewhat clear. I'm going to end this now. Hope you all had a great weekend and that this week is a good trading week for you. And I'll see you again in another video.